Palantir Technologies is under pressure despite the company continuing to grow and win contracts. There's a mix of macro headwinds, valuation worries, and momentum issues that investors are paying attention to. So let's break down everything happening today and what it means going forward. First, let's talk about the stock move. Palantir fell sharply today, even though the company recently posted strong revenue growth and secured new deals. So why is the stock sliding? This drop isn't because Palantir suddenly reported bad results. Instead, the market is pulling away from high-growth tech names in general. Investors are becoming more cautious, especially toward companies with premium valuations. Unfortunately, Palantir sits right in that category. And when the market rotates out of growth and into safety, Palantir tends to get hit hard. One of the biggest reasons behind today's weakness is the macro environment. Recent economic data pointed to a stronger than expected labor market, which makes it more likely that interest rates stay higher for longer. And high interest rates are like gravity for growth stocks, they pull valuations down. This pushes investors to rotate into safer sectors and away from companies whose value depends on strong future growth. So even though Palantir's business is doing well, the broader economic pressures are making investors rethink how much they're willing to pay for high-growth tech stories. Another major issue today is Palantir's valuation. The stock has run up significantly over the past year, and many analysts believe the current price already reflects years of strong future performance. That means there's not much room for error. On top of that, momentum indicators for the stock have weakened. Several key technical levels have broken down, signaling that buyers are losing control and sellers are stepping in. Historically, when Palantir loses momentum this sharply, the stock often struggles for months before stabilizing. In simple terms, investors love the hype, but now they're questioning whether the price still makes sense. While Palantir is still growing, some investors are worried about the pace of that growth. Government spending cycles are slowing, and international deals, one of Palantir's biggest long-term opportunities, aren't accelerating as quickly as some expected. There's no major negative announcement here, but in a high valuation stock, even the hint of slower growth is enough to push the price down. When expectations are sky high, any sign of deceleration can lead to a valuation correction. So what does all of this mean? The key point is this: Palantir as a company is still executing well, but the stock is running into a wall of macro pressures and valuation concerns. Investors want to see whether the company can continue beating expectations, not just meeting them. Here's what to watch moving forward: whether the stock can regain key technical levels and rebuild momentum, whether interest rates show signs of easing, giving growth stocks some relief, and whether Palantir can sustain strong growth without slowing down in government or international markets. If any of these start moving in the right direction, Palantir could bounce. If not, the pressure may continue.